Welcome to Alpha Recap. I'm glad you're here. We're breaking down today's sector action and the big themes that moved markets after the close. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. Excited to dig into a pretty patchwork tape today.
Markets closed with a clear split. Pockets of strength in tech, materials, and real estate, but macro and policy chatter kept the overall rally in check.
Yeah, that summed it up well. We saw sector-level momentum, but the broad market didn't really follow through.
Let's start with the winners. Technology led thanks to AI product launches, M&A activity, and robotics deployments. Micron reported record margins, which traders called notable for the hardware cycle.
Micron's margins were interesting because they suggest pricing power in memory tied to AI infrastructure. Analysts note that product cadence and enterprise spending remain the primary demand drivers.
Right. And the tech strength wasn't isolated. Industrials and materials picked up follow-on demand from automation and semiconductors.
Exactly. Materials and mining were big today. Freeport filed for environmental approval for about $7.5 billion of expansion at El Abra, and Lynas hit first samarium oxide output.
That El Abra filing is a headline because copper is a bellwether for electrification. EVs, grid upgrades, renewables. But permitting timelines can take years, so near-term tightness can persist.
Permit risk matters a lot. Development confidence is high, but execution and local opposition can delay supply additions.
Real estate also showed life. There was about $1.65 billion of Manhattan refinancing, plus big multifamily starts and affordable housing deals.
Those deals suggest pockets of liquidity are returning to commercial real estate, refinancing at scale where cash flows support it. But that's conditional on credit spreads staying friendly.
Now, on the other side, financials and utilities lagged. The S&P 500 slipped below its 200-day moving average after a 214-session run, and that technical break made traders cautious.
Yeah, that tracks. Credit concerns, Moody-type worries, and even partial government shutdown risk fed into a risk-off tone for banks.
So, what really stands out here is how policy and regulation kept surfacing. UBS won a U.S. national bank charter, and the FDIC signaled private equity could buy failed banks, which reshapes the rescue and consolidation math.
That's a big shift. A national bank charter changes how a firm can operate in the U.S., and if private equity becomes an explicit buyer of failed banks, that can compress rescue costs and alter pricing for distressed assets.
Short reaction.
Big move.
Let's talk energy. It was split. Renewables had a massive headline. About 814 gigawatts of wind and solar were added in 2025 on a global basis, and storage tech dominated trade shows.
Honestly, I was a bit surprised by that scale. It underlines how much capital is flowing to long-term clean tech.
At the same time, crude and gas signals were choppy. Rig counts, Norway output noise, and an International Energy Agency release plan left oil markets volatile. The Department of Energy greenlit a 9.2 gigawatt gas initiative in Ohio, which shows reliability concerns are still on policymakers' minds.
So, the headline is a tension between long-term transition investment and short-term reliability spending. That bifurcates capital flows across different parts of the energy chain.
Which means different investment horizons matter. Transition winners versus near-term reliability plays. That separation is important to watch.
Right, and materials tie into that. Metals for renewables and electrification are being locked in, while projects that shore up the grid get approvals.
Crypto had a mixed day. Bitcoin climbed back above $70,000, and lawmakers signaled progress on a stablecoin yield framework. But legal risks for exchanges remained in the background.
That combination often means more retail interest and higher liquidity in crypto-related markets. But legal cases keep a volatility premium.
Small reaction.
Back above 70K.
Now I want to step back and walk through the cross-sector themes that tied today together.
Shoot.
Number 1. AI acted as a multi-sector accelerant. Model launches and an about $6 billion gaming sale supported tech, and that bled into industrial automation and materials for chips.
I mean, when you step back and look at this, AI spending is pulling forward CapEx across cloud, semiconductors, and industrial automation. That increases cyclicality for suppliers, while boosting revenue visibility for platform vendors.
Number 2, energy transition versus fossil supply tightness. Renewables and storage are growing fast, but near-term crude and gas tightness keeps the market choppy.
Right. The policy push for reliability, like the Ohio gas approval, shows grid operators are balancing intermittent renewables with baseload concerns.
Number 3, policy and regulation kept acting as the market governor. Bank charters, FDIC language, stablecoin frameworks, local energy siting, rule-making calendars matter.
And number 4, technicals and credit spreads constrained the rally. That S&P technical break and credit downgrades made even fundamentally positive news get muted share reactions.
So, what were the day's most significant moves and why they mattered? Quick bullets. Freeport's El Abra expansion filing, Linus's first samarium oxide output, UBS's charter and FDIC language, Bitcoin's move, DOE's Ohio gas approval, the big Manhattan refinance, and Micron's record margins, along with FedEx's strong peak season commentary.
Each of those has ripple effects. Freeport changes medium-term copper supply expectations. Linus eases some rare earth supply concerns. The banking moves alter competitive dynamics. Micron's margins validate memory pricing tied to AI, and logistics strength speaks to resilient consumer flows.
Quick reactions.
Got it.
We should also translate this into actionable, non-prescriptive insights for listeners. First, monitor policy calendars and permitting timelines, bank charters, stablecoin rules, energy siting, because approvals change value chains quickly.
Second, use leading supply indicators for commodity sectors. Watch permitting status and construction milestones to know when new supply will actually hit markets.
Third, watch AI product cadence and enterprise spending indicators. Cloud CapEx, server orders, memory utilization, and big corporate AI contracts will say a lot about durability.
Fourth, track macro technicals and credit spreads for risk management. The S&P move below its 200-day average is a clear red flag for some strategists.
Fifth, keep an eye on crypto regulatory specifics. High-level momentum is one thing, precise bill language and enforcement actions are another.
And lastly, differentiate between transition winners and near-term reliability plays in energy. They're supported by different time horizons.
Short reaction.
Makes sense.
Let's call out a few catalysts and red flags to watch next. Stablecoin legislation progress. Permitting outcomes for big mines like El Abra. Quarterly results and guidance from major AI spenders. Energy supply data like rig counts and Norway output. Real estate financing spreads and delinquency metrics. And legal updates in crypto.
Those are the items that could flip today's sector rotations into something broader or snap them back. Analysts note the next few weeks of regulatory milestones and earnings will be decisive.
Before we wrap, a few clear takeaways. 1. AI is a multi-sector demand driver. 2. Energy transition is creating both long-term investment flows and short-term reliability spending. And 3. Policy, credit, and technicals are capping breadth, even when certain sectors show strength.
So, stay theme-oriented and watch catalysts, product launches, permits, legislative votes, and big financings, while managing risk through credit and technical indicators.
Quick two-line reaction.
Themework beats broad, passive exposure today.
Final note. This is informational market analysis only. It does not recommend buying, selling, or holding any security, and it is not personalized investment advice. Analysts' note and data suggest various outcomes, but listeners should consult a licensed financial professional for decisions.
Right. We're presenting market context and signals, not telling anyone what to do.
Thanks for joining me. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks. See you next time for the follow-up on permits, earnings, and those credit markers.